So now, are we good to go for a good revision on Ind AS 38, guys? Yes? Okay. So let's start the revision in 3, 2, 1 and go. First of all, the number of Ind AS 38, name intangible assets. The first point we discussed was definition. What was the definition of intangible asset? It says identifiable, non-monetary, without physical substance, held for use. What is the meaning of identifiable? We will call any asset identifiable when it meets any of the one conditions out of these two. First, either it can be sold separately. See, it is not necessary to sell the intangible, but the question is, can you sell it separately from the other assets? Or does it arise from a legal contract like amalgamation or business combination? If the answer is yes, if any one is met, you will call it as an identifiable asset, right? What is the meaning of non-monetary asset? Non-monetary asset means it is not realizable in fixed or determinable amounts. We took one example that, for example, if intangible is shown at 10 lakhs, it doesn't mean that for sure you will going to get 10 lakhs, right? You will extract the benefits, but you will not get cash or fixed amount worth 10 lakhs, right? That means it is a non-monetary asset. Of course, we will discuss in detail about this in Ind AS 21. Okay. Then apart from this, there was some guidance which was also given on this. What was the guidance talking about? It says when an asset has both elements, tangible as well as intangible, where we will classify the asset. You will have to see which is the more significant element. For example, if you are purchasing a software in a CD, you are making the payment for the software and not for the CD. That means this will be classified as intangible. But when you are purchasing a computer, in computer there is some softwares, you are making the major payment for the computer. That is why you will classify this as a tangible item, right? Okay. Next point was recognition criteria. Same like Ind AS 16, FEBs and cost can be measured reliably. Of course, it should be the definition. This is implied point. Okay. Next point is measurement. Measurement, we have two criteria: initial measurement, subsequent measurement. Initial measurement always at cost. Subsequent measurement, we have two models: cost or reevaluation, right? Initial measurement always at cost. What if the asset is purchased? It is same like 16. Purchase price, less trade discount, and non-refundable taxes, add all the direct attributable expenses. No point of decommissioning is there because there is no substance in intangible asset. Okay. Also, there is one point of deferred consideration. Same example which I gave in Ind AS 16. If you go to buy a, let's say, intangible asset, and if you are making the payment after 1 year, they might charge you some interest. Such interest will be transferred to profit and loss and not capitalized. Simple. Okay. What if you acquire the asset by way of exchange? Same like Ind AS 16. For example, there will be one incoming asset, there will be an outgoing asset. The outgoing asset will be de-recognized at carrying amount. What about the incoming asset? For recording the incoming asset in exchange, we have three preferences. First preference, fair value of asset given up plus cash paid if any. Second preference, fair value of asset acquired. Third preference, carrying amount of asset given up, right? Also under this, if there is a question which says that the transaction lacks commercial substance, in that case we will have only one preference, that is carrying amount of asset given up, right? If whenever I've written same like Ind AS 16, if you are not able to recall that point, you can refer Ind AS 16 also. Okay. If you acquire any asset by way of government grant, we will refer Ind AS 20. Next point is asset acquired as a part of business combination. If you acquire any intangible asset in business combination? Do you remember the example which we discussed? So do you remember Aakash Kandoi acquiring BB virtuals, right? So in this case, whatever intangibles are getting acquired in this business combination, Aakash Kandoi will record the intangibles at fair value. First point. For saying purpose, we call it as fair value, but for Aakash Kandoi, ideally it is his cost. Okay. Second point. Whatever excess PC AK Limited is paying over and above the net assets is goodwill. Because this is purchased goodwill, we can record this as an intangible asset, right? So these 2 points are covered. One point is whatever you acquire in business combination, you will record at fair value, right? And look at the third point here. Whatever excess you pay over and above net assets is goodwill. Okay. Next point. Do you remember this? If there is a customer database in selling company books which was self-generated, it cannot record it because it is prohibited to record self-generated customer database. But for the acquiring company, it becomes a purchased intangible. So he can of course record it, right? So here is the second point. We can record customer database irrespective of whether it was shown in the books of selling company or not. The last example was if there are two intangible items which can only be sold together. That means if they are identifiable together, so purchasing company will also record them as a single item, right? Simple. So this was the fourth point. If intangible is separable but only together with another related item, then recognize the intangible with the related item. Simple. Done, sir. Then under initial measurement, there was this point. internally generated intangible asset, right? What is the meaning of this? So under this, first see, if there is any internally generated goodwill, you will not recognize as an intangible asset. Goodwill, if purchased, it is recognized. If internally generated, it is not recognized. Why? Because it is not identifiable. Okay. If it is something other than goodwill, right? So you will bifurcate everything into two phases. Do you remember my class example? We discussed I wanted to make one special software for you guys, right? So whatever expense you are incurring in research phase, you will transfer it to profit and loss. Whatever expense you are incurring in development phase, you can capitalize, right? But how do we come to know that the development phase has begun? So we will check for these six conditions, right? First is technical feasibility of completion. Second is intention to complete. Third is ability to use or sell the intangible asset. Fourth is demonstrate how it will generate future economic benefit. Fifth is availability of adequate resources like technical, financial, etc. And the last point is reliably measure the expenditure. Sir, all six are to be met. On the date when all six are met, development phase begins. How do we remember this? I had given you a trick. Two conditions are of completion. Two conditions are basically recognition criteria, and two conditions start with A, ability and availability. Simple. You can make your own, or you can remember this. Okay. Also, one clarification. Under the development phase also, you will not capitalize all the expenses. You will capitalize only the directly attributable expenses. Okay. Lastly, some other important points relating to internally generated intangible asset. First, if you are not able to distinguish between under which phase we are falling, you will classify research phase. Second, following items should not be recognized as intangible if they are internally generated: brands, customer database, publishing titles, mastheads. But if these intangibles were purchased, then they can be recorded as intangible. Okay. Finally, research and development project. If we acquire a R&D project from someone, we will capitalize the R&D project, right? But let's say, for example, we acquired an incomplete research project. So if we acquire the incomplete research project, you will capitalize the amount paid. But after acquiring, can I say on this project itself, I will do some research by myself? So self research which was conducted again, such expense will be transferred to profit and loss. And the self development cost which was incurred on this project, you will capitalize it. Do remember this point. This was initial measurement done. Next point is subsequent measurement. Same like PP, we have two models, cost and revaluation. But in this revaluation model, we have one extra point which was not there in India 16. What is that point? If you want to follow revaluation model, you have to find the fair value of active market. If active market does not exist, then you cannot follow revaluation model. Active market is a market where the intangible can be frequently bought and sold, right? So if you have active market for intangible, you can follow this model. If you don't have active market, by default you have only one model, that is cost model. Simple, right? If you are following reval model, again 5 points. Again, everything is same like India 16. So see, if it is same like India 16, I'm not revising it again. Why? Because we can revise it in India 16 now. Simple, right? Okay. So if you are following cost model, it is very simple. If you are following reval model, we have 5 points same, but there is a point which is different here, and that is this point. See, first is frequency evaluation, same like 16. Treatment of accumulated amortization, we have two methods. Remember, we can eliminate or do not eliminate. Okay. Now, revaluation to be applied to entire class of asset. When we say this, that we need to apply it to entire class of asset, right? So this point was there in Index 16 also, but one new point is there, and that is the exception point. What the standard says is, let's say for example, I have 5 softwares. I want to follow reval model for this. For 4 software, I have active market fair value. But for one software, I do not have active market fair value. For the software where do not have active market fair value, for that software, you can follow cost model. But for remaining, you can follow reval model within the same class itself. So here within the same class, we are following two different models. But let's say, for example, for all 5 softwares, I had the fair value, active market fair value. Then in that case, bifurcated models cannot be allowed. Then in that case, you have to follow only one model for all the softwares. Right? Do remember this part. This was not there in India 16. Achha, next point is treatment of revaluation gain loss, same like India 16. And transfer of surplus to retained earnings. Do you remember? Once the asset is out of your books, you will transfer the full balance of surplus to retained earnings. This is not optional. But there was one optional case as well. In India 16, we used to call it excess depreciation. Here we call it excess amortization. That calculation discussed there. But this is the optional. If the company wishes to, it can do that. Okay. Next point. Subsequent cost incurred. Normally, standard says that in case of intangible, the subsequent cost do not result in any future economic benefits. Therefore, such expenditure will be transferred to profit and loss. But I discussed one extra case. Let's say, for example, you are increasing the validity of software by certain number of years, where you feel you will get the benefit, so you can capitalize it. You can capitalize such subsequent expenditure. Okay. Then the list of few expenditure. Do you remember we made a pinky promise that till our death, if we see these items, we will always transfer to profit and loss. These are research, startup cost, training, advertising, relocation expenses. Then the next point is amortization. Amortization method, we have 3: SLM, WDV, universal production. Amortization period starts when available for use, cessates when either you transfer to Ind AS 105 if you have read the Ind AS 105, otherwise you will stop depreciation when the asset is out of your books. See, the point of 105 you will understand only when you have done that Ind AS. If you have not done it, leave it. Okay. Amortizable amount is maximum cost minus residual value. Okay, sir. Next point is residual value. Acha, one more thing. Here. Normally in Ind AS 16 also we discussed that depreciation or amortization based on the revenue earned is not appropriate. You cannot amortize based on how much revenue you are earning. But there is one rare case where we can amortize based on revenue, and that is when the life of the toll is dependent on revenue. For example, government gave you a license and told you that the toll does not have a specific life in number of terms of years, but you can collect revenue, you can collect toll up to 50 CR. That means the life of the toll is based on the collection, based on a revenue. In this case, you can amortize the license on the basis of toll collection. That is your revenue. Okay. Next point is residual value. Always assume to be zero unless there is a commitment by third party or you feel there is an active market available for the intangible selling and it will exist at the end of the useful life. If you feel either of the two exist, then you can say that there might be some residual value. Otherwise, always assume to be zero. Next point is useful life. If it is infinite, you will not amortize, you will test for impairment annually. But if it is finite, you will amortize it. Some guidance was given. First guidance talks about, let's say the validity is 40 years. But if you feel you will get the benefit only for 10 years, you will amortize in 10 years only. Next point talks about renewal period. Will you include the renewal period in the life of the intangible asset? So you will, let's say for example, I had a license of 10 years. Government gave me an option to renew for a further period of 5 years. So will I include this renewal period as well? So it depends on the intention of the company. Also, you will include the renewal period only if there is supportive evidence that you will renew it. If any conditions are there for renewal, you will satisfy them and the cost of renewal is insignificant or not significant compared to the benefits, right? So in this case, in either case, you might include if these three conditions are met. If not met, then you will consider only 10 years to be the useful life. Next point was annual review as per Ind AS 8. Amortization method, residual value, useful life, you will review at each year end. If there is any change in accounting estimate, prospective accounting. For impairment, we will discuss under Ind AS 36. Last point was derecognition, same like Ind AS 16, which talks about derecognizing the asset from the books. It happens when you dispose of, that is, sell the asset or when the life is over, right? Gain loss might arise, will be transferred to profit and loss on sale. Gain loss might arise on sale. Okay. Anyways, so this was the conceptual revision of Ind AS 38. Okay, I hope you understood each and every point. So now in this session we will revise all the questions of Ind AS 38. We have already revised the concepts. Now we will move on towards the question, but I am going to revise only the important questions. Important questions means the questions in which you will face some difficulties, right? So I will revise it. The basic questions anyways are getting covered once you know the concepts. So now let's start the question revision. The first question which we studied was illustration number 3. Right, so it talks about that you are doing some advertisement expense of 8 lakhs. So ideally what we do is whatever advertisement expense you are doing, we transfer it to profit and loss, right? But in can we record advertisement as an intangible? The answer is no, right? But in this question, one thing was there that if you are making a payment of 8 lakhs, only 7 lakhs was for current year, 1 lakh was for advertisement of next year. That means this 1 lakh is prepaid for us. So you will record 1 lakh as a prepaid and then you will write off that prepaid in the next year. Right, so this part you need to remember that the important part in this question was that advertisement is not an intangible, but yes, it can be a prepaid. Okay, also further in the next year you are incurring 4 lakhs also, so we will pass the entry for 4 lakhs as well. Okay, don't worry about it. Also, if you want to find this board notes, you will find it on my Telegram channel. Link is in the description. Okay, don't worry. So board notes I can upload on my Telegram channel. Okay, anyways, so this was illustration number 3. Only this prepaid part is important in this. Okay, now another important question was illustration number 6, a classic question to test your concept of exchange. Now here what was the case was, Sun is acquiring software from Earth in exchange for license. So if you see closely, what Sun is doing is Sun is acquiring software and giving license. But in this question, they have asked from both companies' point of view. So for Earth, the situation will be vice versa. Earth is acquiring license and giving up software. Carrying amount of both is given. So now what I did was, in this question, first I wrote the concept of exchange, like what all preferences do we give. Then there were three scenarios given. The first scenario where both the fair values were available. Second scenario was where only fair value license was available. In third scenario, none of the fair values were available. So how do we solve it? So solve it company by company. First, solve for Sun Limited under all the three cases. Then solve for Earth Limited in all the three cases. Of course, when you solve it, you will try to get the answer on your own. But a good question, you should definitely practice this question as well. Illustration number 6. 7, you can do it on your own. We will come on towards illustration number 8 revision, right? So in this question, what was there? So in the year 11-12, it was said that you are first doing some research, then development. The hint you will get in the next line. Okay. So research phase expense transfer to profit and loss, development phase expense, you will capitalize it. Okay. Now recoverable amount was given. Acha, what is the meaning of recoverable amount? Acha, if till here you have not studied this Ind AS, let me give you an overview of impairment. So before discussing this question, I gave you one overview of the concept of impairment. What is the meaning of impairment? It is defined in Ind AS 36, and the basic meaning of impairment is decline in the value of asset. So if you want to check whether there is any impairment or no, what you will do is you will try to find two values. One is carrying amount and one is recoverable amount. One is carrying amount, one is recoverable amount. Okay. So now, and recoverable amount is what? For finding recoverable amount, we will have two amounts. The value in use and the fair value less cost to sale. Of course, this is defined in detail in Ind AS 36. So as of now, we are not going that much depth if you are not aware of it. But don't worry. Just imagine, if you are using the asset, you will get 1 lakhs, but if you are selling the asset, you will get only 90,000. So what will you do? You will of course use the asset because you are getting higher value in using. So recoverable amount is higher of these two amounts, right? So now imagine your asset is being carried at 1,20,000, but the maximum amount you can recover is only 1 lakh. That means the value at which the asset is being shown, you will not be able to recover the whole value. So that means there will be an impairment loss. So if there is an impairment loss, you will reduce the value of asset and book the loss. Okay. Also, just to clarify, some people get confused between impairment loss and revaluation loss. Both may be losses, but the nature is different, because in impairment loss, we compare carrying amount and recoverable amount, and in revaluation loss, we compare carrying amount and fair value. Do remember this part. Okay, sir. Let's proceed now. So our capitalized amount was 900. In this question, even the recoverable amount is given as 1000. So now imagine your carrying amount is 900, but the recovery which you will make is of 1000. So don't say there is an impairment gain of 100 rupees. There is no concept of impairment gain. Either there will be impairment loss or there will be no impairment loss. Okay. So here your carrying amount is 900, but you will recover more than a carrying amount. So there is no issue with this. So your impairment loss will be 0. Okay. Then in the next year, what do they say? We have incurred a further expense of 6,000. Of course, once the development phase begins, all future expenditure will be in the development phase only. So this will be capitalized. So now your total amount becomes 6,900. Okay. Then it says that on the last day of the year, it became available for use. So next year we will amortize for 1 year. And then on this date, recoverable amount was also given. So we will amortize for 1 year. We find the carrying amount. On this date, recoverable amount was given. So our carrying amount is 5750, recoverable amount is 5,000. So of course there is an impairment loss because his carrying amount is higher, but you will not recover this much. So your impairment loss will be 750, charge it off to profit and loss. Simple. Clear? Yes, sir. This was our illustration number 8, a good question. Now we come on towards illustration number, let me see some good questions. Okay. You can do this question, illustration 13 on your own. It is not a LDR question, but just you can refer this. Okay. Even illustration number 21, you can just refer. Not LDR based on the concept of exchange, but simple question. Okay. Directly come on towards illustration number 27, guys. Illustration number 27, a good question. Let's see what's in store for us. So it says in this question, I'll give you a summary of this. We incurred 18 lakhs for the whole year. But in the current year, first 2 months were research phase, and from 1st June till the year end, that is for 10 months, it was development phase. But the bifurcation of expense was not given. So how do we bifurcate? We have one information saying that 18 lakhs is for full year. Out of this 18 lakhs for 12 months, 2 months is research phase. So we can find out proportionately now that 3 lakhs will be under research phase and the balance will be under development phase for 10 months. You can capitalize 15 lakhs and you can transfer to profit and loss 3 lakhs. But what the company has done is, company has shown 18 lakhs as full intangible. This is the incorrect treatment. Company should show intangible only at 15 lakhs. First part of the question is done. Now the next part of the question talks about recoverable amount. So just a summary of it, the recoverable amount on the year end is 9 lakh 60. Imagine carrying amount is 15 lakhs, but you are not going to recover it. You will recover only 9 lakh 60. So there is an, of course, impairment loss, right? So ideally, I also pass a entry at the year end. My asset is shown at 18 lakhs, but it should be reduced to 9 lakh 60. So I have to reduce the asset by two expenses. One is research phase expense and one is impairment loss. So I will reduce it by both the amounts and my intangible asset will be reduced by 8 lakh 40. Simple question, done and dusted. This was illustration number 27. Okay. Then, question number 1 is also very good. It says that you have a player with whom you have contracted to play for 5 years. That means, let's assume you are CSK, Chennai Super Kings, and that cricket player will play with your team for 5 years. So is that player an intangible asset for you? The answer is no. But is that contract with the player? You have entered in a contract with the player that he will play with you for 5 years. Is that contract an intangible asset? The answer is yes. Player is not an intangible asset, but the contract with the player is an intangible asset. Okay, do remember. Okay, then question number 3, again a good question. What is given here is, first let's see what is asked. So they are asking us to prepare balance sheet and profit loss extract. Okay, so now 3 elements are given. In the first element they are saying PC 13.2, net asset 10 lakhs. So goodwill is 3.2. Just to confuse you, they are also saying life of goodwill is 10 years. Always remember, goodwill is never amortized. It is only tested for impairment annually. So you will not amortize goodwill. So it will stay at 3.2 lakhs only. First part. Second part. In second part, you are acquiring franchise for 80 lakhs. So you will capitalize it. But also you are paying 2% royalty fees. If you are acquiring an intangible in such an agreement where you are paying upfront fixed cost and based on sales, every year you will pay some royalty. That royalty based on sales will be transferred to profit and loss. And that upfront payment of acquiring will be capitalized. So 80 lakhs will be capitalized and the 2% royalty fee which you will pay every year will be transferred to profit and loss as and when you are paying it. Second part is done. Okay. In the second part, they are saying that we acquired on 4th May. So ideally, amortization should come on a day, on the basis of days, na? But one line was mentioned that in the year of acquisition, in the year you acquire, you will take a full year amortization. The company follows this policy. So by this line, a solution becomes easy. Why? Because in the year in which you are acquiring the intangible, you will amortize for full year. I am not saying this. The question says this very clearly. Okay, so for franchise, no need to see the number of days calculation. You will amortize for the full year. Okay, in the year of acquire. Okay, then third case, you have a copyright. To register the copyright, you incur 2 lakh 50. You will capitalize, but also you incurred some legal cost, but not for the copyright. You incurred the legal cost to prosecute a copyright infringement against the competitor, right? So this 7 lakhs incurred to prosecute a copyright infringement will be transferred to profit and loss. Okay, copyright life is 10 years. Is this clear to everyone? Yes? Perfect. Right? So as I said, this will be transferred to profit and loss. So you will just amortize 2 lakh 50 over a period of 10 years. Right? This line is very important in the question, guys. Okay. Now just see the format also if you want to see. So they were asking me extract. So I gave them the extract. Right? Under the extract, there are intangible assets. Intangible, we have 3 elements. Goodwill, franchise, copyright. So goodwill, no amortization. Franchise, amortization of 1 year. Copyright, amortization of 1 year. Okay. So total of the closing balance of all intangible will be shown in balance sheet. In profit and loss, what all elements will be? What all elements will be there? In profit and loss, we will have revenue from operations, right? Then it was given in the question, okay. And how much ever revenue earned, 2% royalty fees is paid. So we paid 2% royalty also. Then amortization will come, and then the infringement case against the competitor, that expense is also transferred to profit and loss, so that will also come, right? This is done and dusted. Apart from this, there is one illustration number 5, not LDR, but a good question. I'll just give you a gist of it. We have an intangible with a life of 15 years, but we are intending to sell only after 5 years. So we will amortize over 5 years. Also, we have a commitment from a third party for a 60% sale value. That means after 5 years when you sell it, that party has committed you that he will give you 60% of the day one value. That means this 60% becomes residual value for you, because as per Ind AS 38, if you want to consider any amount under residual value, you need to have commitment from a third party. So in this case, we have a commitment, so residual value will be there. So accordingly, your amortization will be changed. So the question has mentioned that the company has amortized for 15 years, assuming residual value to be 0. The treatment by company is incorrect, right? So you need to give the correct treatment. The cost is 12 lakhs. Life should be taken as 5 years. residual value should be taken as 7.2 lakhs. Your amortization will be this and the carrying amount will be this. Also, how much concepts to present in the exams, you can write these relevant concepts in the exams, right? So this was the question revision of Ind AS 38. I hope you like it. Also, if you like it, do subscribe to this channel because more such revision videos will come. And thank you so much for watching this video. Again, I'm saying the board notes on which I have solved the solution, you can find this on my Telegram channel. Link is in the description. Do join the channel. Okay, so thank you so much. Bye bye everyone. Take care. See you all. Bye bye.